Tommy Aiello joins me, and he's the Senior Director of Government Affairs at the National Taxpayers Union, and we're going to be talking credit card rates. Tommy, how you doing this morning? Pleasure having you on.
Good morning. Thanks for having me.
By the way, is it Tommy, Thomas? How do you prefer to be addressed? Just want to make sure you get that right.
Tommy's perfectly fine. We're friends, so that's perfectly fine.
Okay, glad to know that. Okay. It's interesting because right now we're in a situation where it is Big Mac time here when it comes to politics around the country, and that is Big Mac meaning big midterms are coming. Okay, so that's the Mac that we're going to be focused on. And a lot of proposals end up coming out, and a lot of this is about the affordability thing. I think this is what's going on. But you have these proposals. You had executive order or proposals from President Trump to cap interest rates at 10%. And from what I understand, Tommy, there's actually some legislation that is supposed to help this happen, capping the interest rates. Now, people who have credit cards are thinking, sounds pretty good. I wouldn't mind that. I think even though I have 850 credit, most of the credit cards are like 25, 26, 27% right now if you carry a balance. So what's the story here? Is it all good? Bad? What do you think?
Well, I think you hit it right on the head, though. Everything is focused on the affordability problem facing Americans. And I think what the president wants to do is get creative and how do we try and solve that problem? And his solution is to put a federal price control on interest rates and supporting legislation that would impose new mandates on credit card processing. I think all of these things, both of those things, are a really bad idea. I think anytime the federal government is getting involved in price fixing or trying to say, hey, the free market, the private sector businesses are not allowed to charge above a certain level, whether it's on gasoline, rent, interchange, whatever it is, I think it's going to have the same impact and it's going to harm consumers. And at the same time, the president, he's been really great about trying to get the federal government out of the business of telling Americans what to do. That's a really good thing. If you see it right now with gas prices, it's because gas prices are down because the federal government has taken a step back from overregulation. Plus, President Trump is putting more money in people's pockets with his big tax bill. All of those things are actually going to help people. But when you put a price control on things like credit cards, it's going to have the opposite effect, and consumers are going to get hurt.
Okay. All right. So how did we get to the point where usury laws were really good back in the day, and now we have interest rates now routinely on credit card that were above what we used to consider usury back in the day, and we just consider this is a free market, I guess, Tommy. I'm just kind of playing devil's advocate on something like this because there does seem something weird that when money is so relatively cheap, your overnight interest rates are like 2-3% with the banking system and everything else, and your credit card interest rate is 25 to 30. Can you understand how people are looking at that and going, something doesn't quite seem right here?
Yeah, I think when we look at that, one, the usury laws that's a state level function. There's no federal price control on the usury aside from
but they used to be quite common though. I know they've fallen out of fashion, over time.
Yeah, I think when you look at it, one, why are banks and credit card issuers charging the rate they're charging? And there's a number of factors that go into it. One, obviously there's a profit motive, but then also they need to take into account defaults, overhead, obviously staffing, and loyalty programs, right? Every credit card usually comes with a cash back option, perhaps lounge access, miles or something to that effect. So when you add all of these things up, that's how you get close to that 36% rate. Now, let's be clear. More people are actually entering the credit card market, and they're offering rates that are perhaps about 33% lower than what we think of around the 25 to 30% rate. So when more people are coming in, it's actually driving those rates down, which is a very good thing. But at the same time, we need to be honest, right? 80% of Americans have a credit card. A majority of Americans pay off their credit card balance every month. And so most Americans are actually paying $0, not even a cent in interest every single month.
And that's the way it is in my household. We pay off our credit card debt every month. Every month.
So when we talk about the minority of people that carry a balance, we need to protect those people. And I think, when people file their taxes and get a $3,000 tax cut thanks to this administration, perhaps they'll be able to help pay down their credit card balance. That way they can help get out of that cycle of debt in a more free market approach. I think that's a very fair thing to ask. And, when we talk about some of the consequences about this price control, what does that actually mean? Well, there's been some studies that say if you impose a 10% cap or you impose credit card processing mandates, as the Senate is proposing to do.
And what are those mandates? What are they trying to do? Are they trying to reduce swipe fees on the merchants, that kind of thing?
They're basically saying you need to give small businesses and businesses a third option aside from Visa and MasterCard.
Oh.
So that has its own impacts as well. It might sound good, but I don't think the federal government should be in the business of deciding market share and how much a business is basically allowed to have.
Huh. Okay.
It's a little bit different.
The reason I'm kind of concerned about this is that swipe fees, essentially, to do business, you're forced to deal with one mafia or the other mafia, either the Visa mafia or the MasterCard mafia. Essentially, I thought that if we're all about competition, shouldn't the federal government actually actually encourage that rather than just letting it be as it were?
No, of course we want to foster competition as much as possible, and I think that's why you're seeing these new entrants come into the market. But, when we talk about the consequences of either that legislation or this price control, which, by the way, there's no legal basis for the president to impose a price control. There's no law on the books. So that's, there's probably going to be some lawsuits right away if the president were to move forward with this. But, when we talk about the consequences, one, a majority of Americans are going to lose access to their credit card. If you're only going to be able to receive a credit card if you have pristine credit, which you mentioned you have.
Yeah.
So when people are going to need credit when they're in a fix, they're going to have nowhere to turn, and that's a real problem. Second, for people that are eligible for credit, they're going to have a higher annual fee associated with their cards. And then three, there's going to be a scale backing of these credit card loyalty points, which are extremely popular with the American people. So when you take all of those things together, no one is really better off. Yes, you're capping interest rates, but one, the majority of people don't pay off their balance every month, which is a good thing. And at the same time, everyone else is going to be hurt. So we need to be very careful with the system that we have. Otherwise, if we break it, the majority of Americans who own credit cards are going to be very upset.
Tommy, I was reading a stat the other day on a financial blog, and they were talking about how 1 out of every 7 credit card holders right now are not able to make their minimum payment. They're in default right now. That's 1 out of 7. And if anything, what that tells me is that it's 1 out of 7 people who probably shouldn't have had a credit card, don't you think?
And that's part of this problem. When cheap credit is so widely available, people are going to take advantage of it. So part of it is self-control, but the other part is if these people are in debt, how do we help them? And like I said earlier, I think what President Trump wants to do is obviously get this affordability crisis under control. Inflation's coming down, gas prices down, other things down, and then putting more money in people's pockets through tax cuts and regulatory reform and small business growth. That, I think, is how we actually help these people, one, get out of their debt, but then also make sure credit is available for people that actually need it in a pinch. And I don't think that's an unfair expectation for people, especially people who believe in free markets and limited government to support.
Yeah. I guess here's and I'm sorry to play a little devil's advocate on this because I can see both sides of this situation. There's not a lot of free market in this economy right now, and there's not much that the federal government doesn't touch, in our world. So I find it interesting that when it comes time for the 30% interest card or 30% credit card interest rates to maybe take a haircut, then all of a sudden everybody's coming out with it's a free market sort of thing. Even then, like I was talking about, you can't do business unless you're doing business with MasterCard or Visa, is another example about that.
Those are different because it's the card issuers, your banks, your credit unions, they're the ones that set the rate. And like I said, there's more entrants coming in, and I actually think you're going to continue to see a decline in interest rates on that because there's more people coming into the market, and I think that there's a realization that perhaps they need to do more. And then let's remember when we talk about these 25 to 30% interest rates, that's over the course of a year. If we divide all of those things by 12. If you do carry a balance, it's only a 2% interest rate every month. Yes, it's still a lot, but even if you were to cap it at 10%, you would still be paying about 1% every single month.
Yeah.
So when you think of it that way, that's how these markets work. And I think there's sort of a disconnect between how people think it actually works and how it's working.
Okay. Well, Tommy, I think the one thing that would be interesting is that if they were to impose a 10% interest rate cap, who would be most excited about that happening? The mob.
Yep. The people would have to go to the black market in order to receive their credit. And I think that's what we really don't want to see. And obviously that's not regulated and it's definitely not safe. And I don't think we want more Americans turning, that direction when they need money in a pinch. And I think it's the majority of Americans can't afford a $400 unexpected expense. That is an extremely disturbing statistic. And I think if that's the case, we need to make sure people have these tools available in those, unforeseen moments.
Don't you see the irony, though, of a government which is $38 trillion plus in debt, wanting to force a lower credit card rate on everybody? You can't help but think that maybe they're looking out for themselves, too. What do you say about that, Tommy?
Yeah, I don't think the federal government should be in the business of telling people about their own finances when we run $2 trillion annual deficits, a $38 trillion debt, and the situation is not getting any better, unfortunately.
All right. Tell us more about the National Taxpayers Union before you take off.
So the National Taxpayers Union, we are the oldest taxpayer advocacy group in D.C. You can find our website, ntu.org, or follow us on social media. We're up on Capitol Hill every day, promoting taxpayer interests, free markets, and limited government.
Speaking of that $38 trillion debt, I know we have this big, beautiful bill which is now going to be in effect and all sorts of things that we're probably going to find out when we start filing our taxes how things have changed. We'll probably see that in the tax rules coming up. But I can't help but be concerned that this could be short-lived. At $38 trillion, they're going to be searching under the couch cushions in the consumer world out there for some change to start paying this stuff down or paying for the bills, don't you think? I mean, every time we spend $3, one of it is borrowed right now in the federal government. It's pretty rough.
I mean, it's extremely scary. And, just on your first point, tax filing season opens on Monday, so a week from yesterday. Most Americans, or every American, is going to see a tax cut. The majority of people will see a $3,000 tax cut. That's great news. But this debt situation is extremely concerning, and there's conversations and movement on Capitol Hill right now to try and address this debt situation. And I do think there's a lot of momentum to do so because we know Democrats aren't going to come to the table and play ball to address the situation. So it seems like Republicans are going to go it alone in order to, address this $2 trillion deficit that we have.
Yeah, so they're going to have to be the adults in the room. We'll see if that ends up being the case, all right? Tommy, I really appreciate you coming on. Tommy Aiello is the Senior Director of Government Affairs at the National Taxpayers Union. You be well, and so even though it sounds good, capping the interest rate, not a good idea, right?
Not a good idea. Well, thank you so much for having me.
All right, you take care now.